Welcome to Learn with Simeon. Get ready to embark on a journey of discovery. Let's learn together.
Yeah, so can you hear me?
Yes, I can. I can hear you now. Thank you.
Okay, okay, because I was trying to start the recording. So,
Okay.
good evening, everyone.
Good evening.
It's going to be a very great session, and one of the key things for this session is clarity into the tax laws and how we can utilize it to our own advantage. We call it tax planning so that we can be able to plan ourselves and make the best use of the tax laws and the like. So please, whenever you can hear me or anything, kindly let me know so that I can uh, retrace my steps back and the likes. So everybody simply understands what taxation is all about, and we know this is basically one of the largest means of income for the government. So the government believes in taking a percentage of our income, and a lot have changed. In fact, when I say the new tax law is to the benefit of the citizens, many people believe, oh, it's trying to preach the government to us for us to like the government. But no, it's basically about what I've come to understand. And of course, I'm not okay with everything in the new tax law, but there are a lot of things in the tax law that uh, we can use to our benefit. Now, what is the goal of this particular session? So that everybody is appropriately informed and that we get the strategies on how to utilize the tax law to our benefit, and then also so that we can uh, use it to so that we can be able to teach others. Yeah, so that we can be able to teach others. Now, there are five things we will consider, but because of time, I will focus on the last one the most, and I will just brush over the first three. So now, number one, why is this reform? Why did they make this reform? Number one is because of the multiplicity of tax and multiple revenue collection agency. So every state has their internal revenue agency. We have the Lagos Internal Revenue Agency, we have the Ogun State. Every state has their internal revenue agency. Each one of them have their taxes. So if I want to get a permit for my vehicle in Lagos, the price is different from a permit for a vehicle in Anambra. The price is different from a permit for a vehicle in Oyo State. The price is different for the levy in Benin. So there are different um, taxes. In fact, within Nigeria, there is over 100 tax levies. There was a particular period of time foreigners were complaining that they pay close to 40 different taxes or levies, because it can either be a tax, it can either be a levy. And another one is we have a complex tax system. Then the cost of generating revenue for the government is too much, because the principle of taxation says your cost of collecting tax should be less than the amount you are generating from that tax. Because if you are collecting tax and you are spending more to get those tax, you are not making any income as a government. Then we have poor accountability and there's growing tax uh, expenditure. So that brought about the harmonization of multiple tax, and sorry, that brought about the introduction of Presidential Fiscal Policy and Tax Reform Committee. So this committee, headed by Tawe Edele, focuses on tax and fiscal policies. The CBN focuses on monetary policies. That's why they talk on the NPR and all those things. Why we talk about fiscal policy? So they are bringing about harmonization of taxes, unification of revenue collection, and all those other things. So now, why do we need this harmonization of tax? We will see that under the federal government, there are 17 taxes that they collect. Under the state government, there is 25 taxes. And under the local government, there are 21 levies that they charge. Now, they are trying to harmonize it to ensure that the taxes are not that much. But at the same time, the government also is not losing revenue. So, what then are the common misconceptions? Government is introducing new taxes. That is not true. Every tax already existed. The only difference was they changed the percentage and the calculations and all those things. Then your bank account cannot be debited. The process of the government coming to debit your bank account would be, they would have, the process of taxes, they will serve you a tax notice, notice of assessment, that this is the amount we feel you should pay. This is the amount of income you made and the like. Then you can object to it, then you will come to a conclusion. When you come to a conclusion, then they will ask you to pay a particular amount. If you don't object and you choose not to pay, then they will go to court. It is court that will now give them the approval that they will give to your bank that can make them debit it. But that would have gone through a process of more than a month where they would have been reaching out to you to come and defend yourself about your tax for that particular year. Then small businesses won't suffer more. They actually enjoy a lot of relief. States won't lose revenue. In fact, the revenue from the federal government to the state has increased in this year by 5% more. Then tax reform is not revenue grabbing. In fact, this tax law has changed from taxing your revenue to taxing only your profit. And then there are a lot of capital gains, minimum wage earners will not pay tax, and the likes. So this tax law actually repealed 11 tax acts and amended 12. So then, now, these are the other far parts of this particular session, which is the 4 acts that was made under this tax reform, which is the JRBA Act, the Joint Revenue Act, the Nigerian Revenue Service Act, the Nigerian Tax Administration Act, and the Nigerian Tax Act. Now, for this session, I will start with the Nigerian Tax Act because that's the major part. I will just try as much as possible to touch the remaining 3. So now, what does the Nigerian Tax Act addresses? It addresses the key tax reforms. It talks about the taxes you pay, the amounts you pay, the percentage you pay, and the likes. That's what the Nigerian Tax Act talks about. So, under the Nigerian Tax Act, number 1 is the incomes of persons, incomes of individuals. Now, this can range from salaries to dividends to interest to rent to royalties to profit from your own personal transaction. It could either be as an employee, either as a business owner. Now, if you have a business registered as business name, you will be under taxation of income of person. If you have a business registered as a company, you will be under company income tax, which is taxations of companies. Now, first thing to understand when it comes to taxation is your residence. If you spend 183 days, that's 6 months and 1 extra day. So we look at 365 days divided by 2. 1 plus 1 extra day. Then you are resident in the country and you are to pay tax within the country. Now, tax for individuals are paid to the state government and not the federal government. So I think recently we were working with a client and we finished paying their PAYE, and the staff came to ask me and was like, now we've paid to the state government. The federal government state taxes? No. This law covers both the federal and the state government. And currently the JRBA, which consists of the chairman of all the state internal revenue service, are currently working on the harmonization of tax within states. So there will still be some guidelines coming out for individuals, but this is a broad, it must not go beyond this. The act is only one state that has currently come out to say, okay, we've accepted this act, but we hope to see the rest come out to do so after this harmonization of tax has come to be. I don't know why. I know you can't see my slides. I don't know why my slides are not showing. Or can anyone see my slide? If you can see my slide, just give me a thumbs up.
No, you may have to restart the presentation.
Okay. Okay. So basically, that is on residency. Then we can now come to understand that, firstly, once your residency has been determined and you are to pay tax within the country, then you are to be charged what we call the personal income tax. Now, this personal income tax is a tax that is due for individuals. Individuals are to pay the tax, and it is charged on your income. It is charged on your income. It is charged on your income. Your personal income tax is charged on your income. Now, for salary earners, it is the obligation of your employer to deduct your tax and remit it to the government within the first 10 days. I think it's now 21 based on one of the emails I got, but I know it was 10 days, but I'm not certain of the 21. So now, for employees, that is what we call the payee. That's what we call the payee, that you see that they deducted money. And for those that pay actual payee last year, you will see that your payee has reduced this new year, because the new tax law actually gives reduction of payee. It might be little, but it's a reduction to people who earn between 2.5 million below, and that's monthly. So now there are different claims you can make to reduce your taxable income. Now, when it comes to payee, you have to understand that there is your income, which we call your gross income. That's your salary, your housing fund, your transportation allowance, feeding allowance, any allowances, everything combined together is what we call your gross income. Now, we have some deductible allowances that reduces your taxable income. So once those allowances are removed from your gross income, we now have what we call your taxable income. That is what the PIT schedule will now be charged on. So what are these uh, reliefs? Number one is if you make housing fund contribution for those working with states, governments, and the likes, you most likely be making this particular contribution, and it is 2.5% of your basic salary, not your gross income. What if your gross income, if your basic salary is just 50% of your gross income? So it is 2.5% of your basic salary. Then another thing is if you do NHIS, although majority of companies nowadays, what they do is more of what they do nowadays is more of they just pay a pension company for you, and then they let you, they carry your cost. But if you are doing NHIS under government schemes, then NHIS is a deductible allowance from your gross income, and it reduces your taxable income. Now, NHIS is 5% of your basic salary also. Then another deduction from your your gross income is your pension. Pension is 8% of your basic housing and transport allowance. 8% of your basic housing and transport allowance is what forms your pension. And of course, under pension, um, your employer is expected to pay 10%. And then under NHI, your employer is also expected to pay 10%. Sorry, please, can you hear me?
Yes, I can hear you clearly.
Okay, thank you. So, okay, so my network is kind of bad. I will share my screen so that you can follow through with me along the slides. So then another thing is if you do life insurance, the monthly contribution or yearly contribution that you make to uh, it is a way in which the is a deduction, an allowable deduction for you. So please, can everyone see my can everyone see my screen?
Yes, I can see your screen now.
So then another thing is rent relief. You can gain rent relief, which is 20% of your annual rent up to a maximum of 500,000. So if you have a rent of ₦1,000,000, you will claim 200,000, but you cannot claim more than 500,000, which means if your rent is 2.5 million above, you can only claim 5%, which is what you can claim. Now, this is the is the schedule. So your first 800,000 is at 0%. Then the next 2.2 million is 1.5, and the next 9 million is 18. Next 13%. Next 13 million is 21%, and then the next 25 is 23, and then above 50 million is 25 million. Now you will be like, first 800,000 is 0%. Then minimum wage earners are not exempted. That's not true. The rule says once you are minimum wage, and in fact, the minimum wage rule has existed for more than 3 or 4 years now. Once you are minimum wage, you pay nothing. But if you are above minimum wage, it is only 800 and not 840,000. That will be 0%. So I will give us an example of the law, and so that we can look at it, at how it is calculated. So I will reshare my screen now to an Excel file. Please just give me a thumbs up if you can see the Excel screen now. So if you have a question, you are raising your hand. Okay. So now, let's say your basic salary is 150,000, and then your housing is 30,000, your transport is 20,000, and let's say you have an extra income of 50,000. That means in a month you earn 250,000. In a year you'll be earning 3 million naira. Now let's assume you don't have any rent relief. Your tax per every month will be 27,500 naira. Now, under the old tax law, if we are to do the same thing, let me try and show that screen. So now, under the old tax law, let's believe that you are earning the same amount, 250,000. And let's believe you don't have any deductions like we did there. You would be paying 29,115,000. Why under the new law, you'll be paying 27,500. That's a discount of around close to 2,000 naira. That'll be discount of close to 2,000. So now, let me reshare back to the new tax law calculation. So you will see how it is calculated. So now, let's believe you don't have any relief. Your gross income will also be your taxable income. Now, your first 800,000 will be taxed at 0. That means after 800,000, once we deduct it from 3 million, we have 2.2 million. Now, don't forget, they said your next 2.2. What this next means is we will remove the first 800 from your money, then we will count your next. If it remains after that next 2.2, it will move to the next 9 million, which will now be 18%. Now we can see here that your money stops at the next 2.2 million. the rest is zero. And that 2.2 million is taxed at 330,000 yearly, which is 27,500. But let's say you pay a rent of 700,000. That's 140,000, 20%. Let's say you do pension in your company. Let's say you don't even do the rest. That's 192,000. Like I said, it is 8% of your basic salary, your housing salary, and transport, not 8% of gross income. It is 8% of just these allowances. And that gives us that you have a tax-free pay, which is an allowance of 332,000. Then your taxable income becomes 2.6 million. And it reduces your tax per month to 23,350. So basically, that's a way in which your tax is being calculated. So then your pension, when you retire, is exempted from PAYE. They won't deduct the PAYE that they did not deduct, and they won't deduct it. If they pay you a compensation in your company, carry the sack you, then one way or the other, they had to compensate you. Or something happened, they had to pay you some gratuity and all those things. They would not charge you PIT on it. But the compensation on loss of office is only charged if your money exceeds a particular amount. I think 50 million for individuals, I'm not too sure. But if they pay you a particular amount of money, I think 50 million, then if it exceeds that amount, you will have to pay personal income tax on it. Then another thing will be company income tax. Now, this is on the profit of companies. Now, why did I say, I mentioned something there where I said they are not charging us or the same way they do before. Because before, there is what we call minimum tax. For individuals, you are to pay 0.5% of your income, of your gross income. If your tax is 0, you have to pay at least 0.5%. Now, that applies also to companies. Before, if you make loss, I'll give an example of MTN that made a loss in 2024. They are mandated to pay 1% of their gross income. That's their total sales, everything. They have to pay 1% of their, not even gross income, of their revenue, because gross income is your revenue minus every cost you use to generate that revenue. That's your cost of the goods and the likes. But 1% of your revenue must be paid as tax, even if you make loss. But that's not the case anymore. You are no more taxed on your revenue. You are now taxed on your profit. So if you don't make profit, you cannot be taxed. Now, what are the exemptions for companies also? Small companies have been increased before 25 million in revenue, not profit or revenue, is what makes you a small company, and you pay 0%. 100 million and below is what makes you a medium company. and you pay 20%. Then once you're 100 million and above, you're a large company. But now, they increase small company from 25 million to 100 million. So once you have 100 million below, and you have 250 million naira in assets, you will pay 0%. But once you are 100 million and above, you will pay 30%. But they are planning on reducing it, but that's dependent on the president. And we can't back up on that because I believe they will first want to look at how effective they are in collecting taxes. That's what will determine if they will reduce it. Then another thing is now what we call the global minimum tax. This is for multinationals. If your turnover, that's your revenue, is more than 750 million pounds or 50 billion naira, you are not going to just pay the normal tax that companies pay. You will pay what we call an effective tax rate of 15%. Because multinationals now, you are in like 20 countries. You will pay tax in all those countries. And then in Nigeria, you pay tax on your income in Nigeria. When you bring in those profits from all those 20 countries into Nigeria, we have what we call the double tax treaty. So the double tax treaty doesn't allow those income, those profits you are bringing from other countries to be taxed in Nigeria again. So you don't pay double tax. So what now happens is that you are free of those taxes. What the government now sees is that if you are a multinational and your revenue globally, your global revenue across all those 20 countries is more than 50 billion naira, then your tax in all those countries plus your tax in Nigeria must not be below 15%. If it is below 15%, then you will pay an extra tax up to 15%, up to the point where it is 15% of your revenue. Now, this is not Nigeria's fault. This is as a basis of the OECD. The OECD gives this principle, and almost all European unions have subscribed to it. We call it the global minimum tax, including Nigeria. Most African countries, everybody have signed up for this minimum tax. And it's beneficial though. That's for another thing. Now, what are the other things that you can use to reduce your profits? So you have your profits, then you have your taxable profits. Number one we've mentioned is if you're a small company, those ones are general principle. You are exempted. But if you're a large company now, if you have losses from previous year, like MTN that made loss in 2024, they can claim that loss relief in 2025. Now they make profit this year, they declared today, and they made profit. They might not even pay any tax, although they will still pay something. But because it's only a percentage of that loss that you can claim, I think 25% that you can claim in that year. You pay the remaining tax, and you will keep on carrying it forward until you claim that loss for that year that you made. Another thing is there is capital allowance. The government wants you to invest in your business, but because the more you invest in your business, the more profit, the more people you can employ, the more tax on individuals they will collect, and the more company tax they will collect. So when you invest in assets, you buy building, you buy machineries, you buy all those things, you are giving what we call capital allowance. So 10% of your building, they will deduct it from your tax as a capital allowance. Now, don't worry, don't pay us this amount. You've invested, you spend money in investing in assets. Don't pay us 10% of the cost of this building. You remove it from your tax, pay the rest. And the like, there are a lot of things under it. So capital allowance is a tax deduction for you. Then another thing is some of your expenses are tax deduction. Your salaries, your rent, your interest on your debt. If you make donations to approved public funds and the likes. But this is capped at 10% of your profit before tax. You can't claim more than 10% of your profit before tax. So all these expenses can be deducted from your profit to get you your taxable profit. And it is now on that taxable profit that you will pay 30%. Then there are also disallowable deduction. There are some expenses you will incur that you can't deduct. Example, paying directors. When they say management fees, is directors. When you have expenses that you should pay VAT on and you do not pay, they won't allow that. Depreciation is not really an expense. It's just the reduction based on wear and tear on your assets. They won't give you that. Then, now, there are some entities that are not even taxable. They are not to pay CIT. Things like churches, mosques, cooperative societies, non-NGOs, trade union, any business that when you are registering it, it is not for profit. You are not to pay company income tax. Even if they engage in businesses, they won't pay because that money is for the benefit of the public. That's what they are established for. And then you can create an NGO and use it for business. They will sue you. In fact, it's punishable under the law. Then another thing is we have businesses. I won't just mention agricultural companies, but we have businesses that we call priority sector. Well, we call them pioneer status. They are exempted for some particular years. So if I start the agri business, a farm, whatever, agricultural business, I can write to them that I want to claim my exemption from paying profits for the first 5 years of my operation. They will grant you 3 years. Then after 3 years, you can extend it to 5 years, but it's a maximum of 5 years. So some pioneer status companies are first 3 years, some are 4 years, some are 5 years. So they are exempted from paying any form of company income tax within the first 5 years. So then you are to remit and pay within 6 months. For individuals, if it is company, the company is expected to pay it within the first 10 days of the next month. So for instance, February now, many people have collected salary. Between March 1 and March 10, every company must pay their PAYE to the state government. But if it is that you are an individual remitting, doing business on your own, or you are a businessman, you must pay your tax within the first 3 months of the next. So all your income for 2023, 2025, you must pay it before March 31st. And in fact, even as a salary earner, when your company remits your pay, before March 31st, you must remit your own income also. If salary is the only income you have, Tell them all your income came from salary. You still also have to file. So every individual has to file. But for company, it is within 6 months. They must file within 6 months and they must pay within 6 months. After then, they will pay penalties. So that is basically now for companies in the past, they pay petrol, police trust fund, they pay tertiary education tax, which goes to pet fund, they pay NRSA, they pay a lot of taxes to the federal government. For instance, I think tertiary institution is 3% of their profit. Police trust fund is like 0.002 something percent. NRSA also and the like. What the government did is, okay, instead of having 3% here, 1% here, 2% here, of like 5 different taxes, we join everything together and call it development levy and charge it at 4%. Now, if you are not to pay tax, you will also be exempted from this levy. So small companies are exempted, non-resident companies are exempted. Now, I'll just mention 2 other taxes, which is the tax on VAT, your VAT. VAT is basically 7.5% on every goods and service, except they are exempted. And it is the burden of the seller or the supplier to collect that VAT on behalf of the government and remit it within the first 21 days. So it's 7.5%. And there are some goods that are, and if you don't collect it, the government will fine you. They will collect it from you with penalty. But it's not every company that can charge VAT. Small companies, that's 100 million below, are exempted from charging VAT. I've seen some companies saying, oh, you pay me VAT, oh, I don't want issue with the government. If you don't do 100 million in sales revenue, you are not to charge VAT, you are not to charge withholding tax also. So now, VAT under the new tax law is now claimable. So let's say I buy some goods, I pay my supplier VAT. When I sell, of course, I would add the VAT to my cost and then add my profit. That's what we call output VAT. When I sell and I charge my customers VAT, I can claim that money back if my input VAT is more than my output VAT. Because in fact, I might be buying some goods. Let's say I sell bottled water now. I will buy plastic. Plastic is VATable. But bottled water is under food. It's not VATable. Are you not saying my VAT will go like that? No. What will happen is I will write to the government and tell them to pay me back that money. So under the new tax law now, they are making it that the government can pay you back. And if you don't want the government to pay you back, you can write to your tax office that you have this VAT input VAT. They should use it to pay your CIT. So instead of you paying CIT again, once you file for your CIT, you will not tell them to use the money to pay for your CIT. So we have goods like oil and gas export, baby product, foods, all those things, they are all VAT exempt. Then things like educational material, medical things, agriculture, energy, they are 0%. Please, 0% is different from VAT exempt. Let's just accept it out. The only thing is you are charging 0% as your VAT. You are not collecting any money on those items. And currently, petroleum products, renewable energy equipment, and CNG are all suspended. You are to charge VAT, but currently it is suspended. So that is for, then we have stamp duty. Stamp duty is one of the most, the least complied tax. For instance, if I have a contract with you and we go to the court of law, if there's no stamp duty on that contract, it will not be admissible. So your rent, you should pay stamp duty. Your contracts, all those things should all have stamp duty. Now, an example of stamp duty that we know is what we call the EMTL, electronic money transfer levy. The 15 naira that they are charging once you transfer 10,000. That's an example of a stamp duty. But under the previous tax law, it is the receiver of the money that will pay the tax. But under the new tax law, if you are the one transferring that 10,000 naira, you will be the one to pay the 15 naira. Then we have exemptions also like shares, government shares, treasury bill, all those things. They are exempted from stamp duty. If you are borrowing loan under 12 months, is exempted from stamp duty. If you are selling a property but it's below 1 million, they are exempted from stamp duty. Your salary payment is exempted from stamp duty. Then we have the withholding tax. We have the withholding tax. Now, the withholding tax vary. It is different percentage. And it depends. It's not a final tax, because if I charge you withholding tax, I will remit it. And once I remit it, you can claim that withholding tax when you want to pay your own company income tax. It will reduce your tax. So it's not a final tax. The rest are final taxes. Apart from VAT now, that you can claim input VAT. But the rest are final taxes. Now, lastly, I will just go through the first two, the JRBA and the NRS. So the NRS Act establishes the Nigerian Revenue Service, which is formerly called the Federal Inland Revenue Service, which is now the Nigerian Revenue Service. So their duties doesn't change. It just changes them from FRS to NRS. While for the JRB, it talks on the procedure through which you can seek remedy when a tax authority is giving you a bill that you know you didn't make that kind of income. So it establishes three things. It establishes the Joint Revenue Board, which serves as a intermediary between the federal government and all the state government internal revenue. It also ensures that tax ID are the same. It ensures that they are the one working on the harmonization of tax. Then that act also establishes the Tax Appeal Tribunal. The Tax Appeal Tribunal already existed in the past, but it was under the FRS Establishment Act. So they were deemed not to be independent. So now it's established separately, independent, and covers federal and state, not just federal. So the tax appeal, so if your tax authority send you tax now and tell you this is the amount you should pay, this is the amount they'll give you what we call best of judgment. You will now appeal to them. If they did not accept and you are going back and forth, you can now write to the tax appeal tribunal that you want them to sit on your case. So tax appeal tribunal is like a court. They will sit, they will consider evidence from both the government side and from your side, and they will make a ruling. If you are not comfortable with the ruling, or if the government is not comfortable with the ruling, then you will not take it to the Federal High Court. And from the Federal High Court to the Appeal Court, and from the Appeal Court to the Supreme Court. That's the process of that. And then the Supreme Court is final. Then the third thing that the JRBA establishes is the tax ombudsman. So for the tax ombudsman, they are an independent body that mediates between the tax authority and the individual. So you can write to them that this is the issue you are having with the tax authority. They will sit down with the matter and serve as a mediation between you and the tax authority. But if you've taken the matter to the tax appeal tribunal, they cannot sit on your case again. Another thing is they do not give you the assessment that, okay, go and pay this amount, this is the amount you pay. No. They just stand as a mediation to ensure that the tax authority treats you fair. And you also, you give them evidence to back up your claim. Then if they submit a submission to the tax authority and they don't follow it, they have the authority to go straight to the National Assembly, to write the National Assembly to call that tax authority to comply. And the tax authority, the National Assembly will sit and see if what they told the tax authority to do is within the law, and then mandates the tax authority to comply. So that's where we end for today. There's the material. It's more than 100 pages. So you can get it later and study it deeply yourself. Thank you so much.
Thank you so much, Mr. Simeon. This was a very insightful session. Thank you so much for spending time with us tonight. So we'll be taking questions shortly. I can already see one hand raised. Okay. Okay, Dr. Confidence.
Mr. Confidence.
Thank you.
Yeah, sorry, Doctor.
Okay, thank you. Can you hear me now?
Yes, ma'am. Good evening. Can hear
Good
you.
evening. Good evening. Thank you so much for this session. It was very insightful. Thank you, Mr. Simeon, for giving us your time and the knowledge. We appreciate. Okay, so I have a quick question. You were for the pay as you earn tax. You mentioned some deductions that are accruable to you before the tax calculations, right? So I wanted to know for the rent refund, you mentioned the what was it called, the NHIS and what have you. How do you go about getting the rent refund? I'm asking for someone maybe that works with the government and the government does the deductions at source, right? Now, how do I go about recording that? Oh, this is actually how much my rent is, and how do I go about getting the rent refund that is accruable to me to be
Okay.
refunded before the
It
tax?
is not refund. It is relief.
Oh, sorry, relief, whatever. Sorry about that.
Yes. So it's not that the government is going to pay you. You've already paid your rent. They're not telling you 20% of that rent, they are going to give you as a relief from your gross income. So instead of you to pay tax on your total gross income, that your gross income, they will now deduct that 20% that they are giving you as relief. The rest is what they will now calculate your tax on.
So
So
how
it's a
do they
really,
know
so
how
if
much
you
is
want to
my
claim it,
rent?
what do you say?
And how do they know how much my rent is?
You will submit evidence, your receipt of rent
Oh, to the bank or to your
on the bank
employer?
to your employer. So if it's a company, your HR, whoever does the schedule for your, every company deducts PAYE at source.
Yes.
So you would have reached out to them and tell them this is my deductions. And then you
Oh,
give them evidence, they will
oh,
calculate it, and then you ensure that they pay you the right amount after the deduction, after the
deduction.
reliefs have been removed. So
Oh,
automatically, if you work with the government, those reliefs are already calculated,
yes.
but the rent might not be.
No, the rent is not
So
calculated,
you,
but the other
yes,
NHS and every other thing is already calculated in
yes.
your
So
income.
you just have to meet up with the person in charge of your salary to and provide the evidence. Ask them for the process for you to claim your rent relief, and they will claim it for you.
Okay, just a quick one. So, has this been is this tax new tax law, has it kicked off? Because you said only one state has
Yes,
adopted it. I know you mentioned
every
something
state
like
it
that.
has kicked off. The thing is, the adoption of the tax law is subject to review of every state. I'll give you an example now. Food is not vatable, right?
Yeah.
But food from restaurants and all those places are vatable. But within Lagos State now, Lagos State says don't pay VAT of 7.5% to the government. Pay me what we call consumption tax of 5%.
Okay.
So nobody in Lagos, no restaurant in Lagos pays VAT of 7.5%. They only pay 5% to the Lagos State government as consumption tax. So
Okay.
every state has autonomy. State actually has autonomy on what it wants to do. It's just that the autonomy is is
Under
limited,
control.
and that's why I think they are bringing this federalism act that they are talking about in the Senate. So when they adopt it, every state has already started. In fact, in the Lagos states that I deal with, Ogun State that I deal with, they are asking for your rent receipt. They are asking for you to declare your rent, so that when your employer says this is your payee, they will know your calculation.
Okay.
So the tax law kickstarted in January 1, and every state is implementing it. They might make changes along the line, but as of today, the tax law is effective in every state. But it's only one state that has come out publicly to say they've adopted it. In
Okay, sorry.
fact, before the end of March, we will see a lot of JRB guidelines and what like policies that will guide each state. Because what they are doing is everybody pays the same thing across all states. And
Mm.
once they do that, then we will know how many other taxes. But you see, personal income tax and company income taxes, and any tax that relates to the federal government, they are already static. You see, the taxes like VAT, withholding tax, and all those ones is what the states will most likely subject to. But this particular one, very active. Every tax is currently active until each state now brings out their implementation guidelines.
Guidelines. Okay. All right. So sorry. Another question I have, um prior to January, we kept hearing about how every money that enters your account would be calculated as part of your income and taxed. So now let's say for instance somebody works in a company and that's your primary employer, right? And then that's where your payee tax is deducted from. However, this person does one or two side businesses, side hustles per se, not really business in the registered sense of it. Maybe you provide services one or two places and they pay you stipends, 20K here, 30K here, you do somebody's hair, the person does the transfer. Those monies that come in, are they taxable? Are they calculated as part of your income? How does the tax system differentiate the gifting, as in gifts or what's it called, gifts, support, financial support, pay for and fee for services from your total income, and how does the tax law affect those extra monies that come into your accounts?
Okay. Well, I think in the previous years, the state government, which deal with individual, have really not given much effort to tax audit. Companies do tax audit. Now, the reason why um, they do this is so that they can check your books to ensure you've complied. Then they will give you reviews and everything, and then you will come to a conclusion and pay whatever you should pay. But for individuals, the reason they've not been doing it in the past is I think the cost of collecting those taxes are less than the tax they will collect. Because 90% of um, of the population just don't even go beyond the second or third level of the tax schedule. Do you understand? They don't go beyond the 800, 2.2, and 3.2. They don't go beyond that. So when you now spend money collecting, well, I think this year they want to do that, but we don't know how to do it. But this is the advice we give company, because I think I'll give an example. Because I'm starting my firm this year, and I was speaking with a team of Nestle marketers, and they were like, "We sell goods every day, worth millions. We collect the money in our account and then remit to our distributor. Would we be taxed on the money we give to our distributor also, aside our gain?" And the principle is you keep receipt. There must be an evidence to back up your money relating to income and your money relating to family support or gifts. In fact, people can give to any amount, but you can't say that you were getting money every day throughout the month of February and it's all gift. I went somewhere to withdraw and they were telling me put narration as gift, and you're doing POS. You will do close to 100 transactions in a day. And you want to tell me people just love gifting you every day like that? So some of all these things matters. There must be evidence of what pertains to your income and what pertains to gift. So when it is income, what do you sell? Do you issue receipt of sales to this person? Let's say you create gift boxes and you sell to somebody. Issue them a receipt as evidence of your sales. when you buy all those boxes and all those things, collect receipts. So that, in fact, when you are now talking to them, you will tell them that, okay, let's say ₦1 million is your total income or is your total input into your bank account. And only 700,000 comes from business or income stuffs. 300,000 are gifts. Show them the 700,000 receipt of your sales and tell them out of this 700,000, 500,000. It cost me 500,000 to get this income. They will only charge you tax on that 200%, on that 200,000 rather, not even the 700,000. Because those costs are directly related to the income. But it's not that you will not make costs, you will not say, oh, I bought shoes, I bought clothes. No, they won't even accept this one. Because for
Okay.
individuals, you are taxed on your income. So
Okay. So
when
what
they
you're
won't
trying to
tax
say?
you on your total income. Okay, sorry, I'm listening.
Okay, sorry. So what you're trying to say, for those of us that are doing business, right?
Yes.
You have to go to the revenue office to sort out your yearly tax, right? At the
Every
end of the
individual,
year.
whether you are doing business or not, that's what I was saying. Even if your employer remits for you, you still have to file. And I feel you don't
Okay, you still have to
necessarily have
file.
to go
Wow.
to the tax office. Yes, you
Oh,
still have to file. You have to
so
file
even
that even if
some,
your income is just salary,
yeah,
you
even so,
calculate your
those
total
that
salary.
work with the government parastatals that are deducted at source, you still have to go yearly to the tax office to file for your tax for the year.
I don't think you necessarily have to go. Most of the
So how
tax
do
office
we
currently
do
have
the filing?
portals. You
Okay,
can do
okay,
it
but what?
online on your portal.
Okay, but what you mean? You must have to personally file for it.
Yes, you must personally file. Yes.
Okay, is that where the
Just file
TIN
your
now
total
comes
salary.
in? Mm.
Yes, that's where your TIN comes.
Because
But
all
I
this
think
while,
each
some of us
state have
already have
their
TIN.
tax ID.
Yeah, the tax ID or something. Some of us have the
Mm.
TIN already, even before this new tax laws. And then there was no filing that was necessary. At least I'm talking because I work with the federal government. There was no filing. We just through the IPPIS submitted our details, and then our TIN was generated without any filing attached. So I'm surprised you're saying, oh, you have to file yearly and every other thing. It's kind of confusing.
That's where I was making my point of the government, the state government didn't mandate, they didn't really bother about individual. In fact, they believe if you as an individual didn't do the right thing, they will collect the money from your employer because it is the responsibility of the employer to collect the money from you.
Okay.
So it's your employer that will bear the burden. So,
Okay.
but now most states are kind of saying, okay, individuals, please kindly also file your return. Because now, with the way of all these digital stuff, side hustles, and all those things, they believe people are not just doing one thing to survive now.
Mm.
You get it? So that's why they are saying, okay, come and tell us that you have other incomes. But if I'm an employee, I'll just file my salary as my total income and I'm not paying anything else.
Yeah.
But when we see how they get strict within this year, then we can enforce, because I know over the next 2, 3 years, compliance will get stricter, and then almost all incomes, you will need to file your actual income for the year. Compliance will surely get stricter, but there is no government that can truly get the tax that they should get from people. There's no way.
Yeah. Thank you
So did
so
I answer your
much. I
question?
really appreciate you. Thank you so so much. That was quite exhaustive. Thank you. Sorry for disturbing.
No, it's not disturbing. That's why there's this session. So is there any other person with any other question?
Okay, so I have two questions. First of all, how does the layman, that's for people who are just maybe illiterates or just normal people, how do they go about filing their taxes? Okay, and then
Uh,
how
that,
often?
that's what we call, sorry, let me answer it. That's what we call the informal sector. And
Okay,
that's why they are killing them with more taxes than they should actually pay. So you will see them pay market levy. You will see them pay one store levy. You will see them pay one particular another. Local government will just bring every forms of levy because they know the state government is not getting personal income from them. The first thing is they should register their business and they should get a tax consultant that can help them comply. That's just it. And to be honest, it will significantly reduce the amount of tax they pay. Of course, they'll still pay all this market levy because I think local government will not most likely give up on those type of taxes.
yeah,
But when it comes to personal income tax, for instance, I know that the Lagos government goes to shops and they will just give you receipts, pay 500 naira, pay 1,500, pay 2,000 naira, and they do it every month. Now, for you to pay 2,000 naira as tax in this country under the new tax law, then you are earning an income of, I think, that should be around above minimum wage, but not up to, uh, I think, not up to 85,000. I'm not sure with the calculation. Now, these people are doing business. We say they will register business name, not company. They are allowed to deduct the cost of buying the product they are selling. So someone sells pepper, he buys it at 100,000, sells at 120,000. You don't tax 120,000, you tax the 20,000 profit. If someone now makes 20,000 profit in the month, should the person pay tax? So now they spend this amount of money paying all these taxes where they could keep account, keep the receipt of your transactions, keep your account, and you will find now for the people that are not really literate, they might suffer a little. And that is why there is need for sensitization for them so that they can reduce the tax they pay. That's just the thing I can say for them. They need to get the knowledge to be able to defend themselves. So they don't just give them taxes anyhow. So what's your second question?
the second question is it too late for companies that were registered as business name? You know, there are some companies actually um that are being registered as business name. Now they fall under the personal income tax. Is it too late for them to
Yes.
upgrade or to migrate to the other side, that's the company
It's not too
registration?
late.
Okay.
You can always go to the CAC portal anytime. In fact,
Mm,
I can change my
okay.
business name to company and my company to business name.
Okay.
Whichever one I want to do, I should just write, I should just go to the CAC and make the change and inform the tax office that change has been made. That's all.
Okay. So
And if you've not
lastly,
been
how
registered
often
with
are
the
we
tax office, just make the change. Then when you are registering, you register as a company with the tax office.
okay, that's fine. Then how often are businesses and individuals supposed to file their taxes? How often should it be? Should it be every month or every year?
For employers that deduct PAYE or companies that are large companies that are allowed to charge VAT and withholding tax, you pay for PAYE. It is within the first 10 days, or is it 10 or 14 days of the next month? So the PAYE they deduct for you this February must be paid before the 10th of March. For VAT and withholding tax before the 21st of March. So any VAT you deduct for the month of February, you have to pay it within the next 21 days. Any VAT, any withholding tax you deduct within the month of February, you have to pay it before 31st of March. That's the principle. But for
Okay.
company income tax, that's your own tax on your profit. You only pay that tax after you've completed the whole year. And that is not January to December. That is your own accounting year. Some businesses, their accounting year is April to March. So their 6 months starts counting after March. So you have to pay 6 months after your accounting year.
Okay.
Then for individuals, yours doesn't have accounting year. It is between January and December. So
Oh,
you must pay it before the 31st of March. So for individuals now, ensure you do your filing before 31st of March.
okay. So what are the penalties if people do not adhere to the instructions?
Now, I'm with you. Sorry, you said
I say, what are the
other what?
penalties if people do not file their taxes?
Okay, penalty.
Yeah, what are the penalties? Mm.
Uh, for instance, you'll be charged 10% penalty on the tax you should pay. Then you will now be charged an interest aside the 10% penalty. Please let everybody mute. So you will now be charged an interest at the current CBN interest rate, which is that NPR rate that they did this year, that be this week rather. So you will charge an NPR rate on the amount you should pay plus interest. And in fact, plus penalty. Then there are some taxes that interest rate will be monthly. So if you default, and then there are some that are fixed. For instance, if you are a company and you do not register, you have to register within 3 or 6 months. Between 3 to 6 months. If you don't, after that 6 months, the first month is 50,000, and then continuous months also. Okay. So there are various fines. The fines are in the material. All those fines are stated under the Nigerian Tax Administration Act. The Nigerian Tax Administration Act talks on how the tax is administered, the deadlines, the filings you should do, and the penalties.
Wow. Thank you so much. Are there any other questions? Okay, P.
Yeah, someone is raising their hand.
Yes.
All right. Good evening, everyone. Good evening, Mr. Simeon.
Good evening, sir.
Good evening, sir.
All right. Thank you so much for the wisdom and the enlightenment you're bringing to us in this tax matter. I want to thank you, Mrs. Joyce, for bringing this up, setting up this, I call it a class seminar. Okay,
Yes, sir. Thank you.
I have a few questions. I think there are about 6 of them. I was not from the beginning. I didn't join earlier enough because I was driving. So, okay, Mr. Simon, we're a pastor now. I'm a pastor. Let's start with that. So, I also do business, but let's talk as a pastor. As a pastor, how can a pastor calculate his tax? Now, seeing that he receives salary from the church, okay, but the majority of his money comes as goodwill gifts from church members. So how is he going to is he going to be taxed on those goodwill gifts? You get what I'm saying, sir?
Yes, I understand you, sir.
Yes. So
So
sometimes the
it
salary
is a
can be, let's say,
responsibility.
are you there?
I'm not, sir.
Let's say the salary can be, let's say, 200,000 a month, but the goodwill gifts can be up to 5M a month. So how can he reconcile these two?
Then the members or whoever is giving the gift should be able to make it clear that I'm giving gifts. So when I'm giving somebody money, I put it as gift. But when I'm doing every other thing, I know it is not gift, it is not gift. It is the church that should deduct PAYE and remit on your behalf to the state government. The rest is not taxable. Except if you have another income aside the gifts from the members.
Yes. Yeah, that I come in that place. I have other income aside the gift. So what I want to know, should I have a special account for receiving the gift and another different account for the business? Because all this money coming through one account. So if I'm getting income,
You can choose to do that. You can choose to do that. In fact, the government knows all the account number you have.
Yeah.
Today, we're talking about a company and we're like, this person's tax ID is not active. We want you to activate it because the person is trying to open a bank account and the bank cannot validate the tax ID. It's a bank account for a company. Then the person was like, go and file your previous tax. If you don't file it, I'm not going to do it. We're like, sir, please, we need this for the bank account for our client. And he was like, your client already has a bank account now.
Yeah.
So they know all they need is just they have what every tax office have a intelligence unit, and they have a data mining software that can mine every company, every business that you are attached to, and it also can tell them all your account numbers, but it cannot tell them your account balances and transactions going within. That's why they will see request for your bank statement.
Yeah.
But they will know that if you present one bank statement, they will tell you have 3 bank accounts. That what happened to the remaining 2. So you can separate it just so that you can have clarity.
Yeah, but now it's quite difficult getting full compliance from people that are gifting you. Sometimes you don't know them. Sometimes it's people you have impacted. You've not even spoken to them before. Maybe you spoke to them on a corporate level, but directly one-on-one, you have not had personal relationship with them. So how are they going to know that they must put gifts in the narration?
And that's why I feel your idea of separating it is the best thing.
Okay. My questions are much. Let me come to number 2. Then how is it possible to keep all the receipts of all the transactions? Example, I go to Market Square, I go to everyday supermarket, all this supermarket here and there, a lot of transactions. So it has been bothering me, keeping receipts, all those receipts. I don't know where they are. I threw it. Some of them I leave it for those guys, those security guards when they want to check it. So in reality, is it possible in reality? Like, are you telling me you have been able to keep all the receipts of all the transactions you have done since January till now? Not even the whole year, from January till now.
Well, I won't say it's possible, but it's possible for businesses.
Yeah, businesses, yes.
If it is my own personal,
yes.
What are they calling it? Stores. I don't need to keep it because it's not going to get me any tax deduction. My salary is already been deducted for paying. That's my final tax.
Okay.
If I have other incomes,
all right.
If I have a business that I'm running, but it's a personal business that gives me income.
Yes.
Any costs that I incur towards getting income through that business, I will keep it. In fact, if you know you will lose it, have an email, let's say your business email. Once you get the receipt, you snap it and you keep it in the drive.
That's right.
Because I will tell you, one of the hardest things is defending yourself before tax officer that you spent 20 million on these expenses and they have to let you deduct it. Because if you did not show evidence, they believe you are lying.
Okay.
So one of the issues we have with our clients is them providing us those receipts. And the tax office will add up all your receipts to ensure it aligns with what you filed on the portal as your income and your expenses.
Okay. Receipt also includes receipt of transactions, maybe transfer done through mobile app.
Yes, you know those ones, you can easily get it back from your bank statement. Of course, when they are coming to audit you, they will collect your bank statement.
Okay. Okay. But a lot of people are going to fail there. Nigeria, I don't think we have gotten to that.
What do you say?
As a lot of people are going to have issue with all these receipts pattern, because people I've been dealing with, I've been in contact with, I don't think any of them is keeping this receipt. So I don't know how it's going to for this
just
first
to minimize that, because one way or the other they will still pay, but what you will pay will be minimal.
Okay. I don't know if my time will say permit me. Then what is the implication of not putting or not putting a narration in a transaction? What is the implication of
It gives them the opportunity to say everything is an income or everything is not an expense.
So what is the implication of not putting it if you didn't put narration?
That's the implication. The tax office can say, how can we know that what you said is a gift? Is not gift but income. But at the same time, once you can defend yourself, your tax liability will be minimal.
Okay, number 4, are you to be taxed for money moved from one of your accounts to another of your accounts?
No.
Okay. Then coming to this
software, we minus those ones.
All right. All right. Then coming to the less privileged and the poor people, those on the lower earning brackets in the nation, who are even illiterate and not informed, how are they going to be able to follow through or even acquire the services of a tax consultant? I heard you say they should get a tax consultant. Somebody that is earning like 20,000 a month, how can he be able to afford a tax consultant?
Somebody that is earning 20,000 in a month,
yes,
tax authority won't reach his side. Like I said, the cost of collection must be less than the amount they will collect. Someone collecting 70,000 below is not to pay any personal income tax.
Good.
So why target people that are paying zero when we can target? In fact, in Lagos here, we have the headquarters and we have the mini tax stations. The mini tax station deals with companies or individuals that pay less than 5 million naira monthly. The headquarters only deal with people paying 5 million above in paying tax or personal income tax.
Okay.
Now, those even mini tax won't bother with people that are paying. For instance, we have companies that they've never come to audit because it's a waste of time. Their whole tax monthly is 8,000 naira. But our companies that have a lot of staff and they are paying like 100,000 monthly. We have done like 2 audits in a year for them before. Whereas one has never been audited for 5 years. So they won't disturb themselves once, except if they have doubt that, oh, this person is under remitting. That's just it.
All right. Then the last is what about having those that have, like me, there are some company I registered with the CAC. I think they're up to 5 that are not really functional. You know, what is the implication of those, that kind of thing?
Apart from non-compliance with CAC, you don't have any implication as long as they are not functional. You can even close them down from the CAC if you don't need them. But if you still need them later, you can keep them there.
All right. Okay. Then, what is the cost of getting the services of the tax consultants?
That is based on personal communication.
Yeah, maybe
personal consultation. You do a consultation, then we know what it goes into, ensuring that you are compliant and the likes, and then a bill will be sent, and then you can come to agreement, and then you can employ the tax consultants to pick up your taxes.
Yeah, can you give me a clue? Just a clue. It mustn't be exact. Just within this border.
You know, I can't give you range because tax consultation goes as high as 100 million.
Okay.
So because for instance, I know the company my brother works in, their tax consulting firm, they pay them 100 million above. So volume of what they will be doing, the number of taxes you have to comply with, and all those things, they matter when. So nobody will just give you a price and say, bring this amount and I will do your tax for you.
Okay. Okay, it's all decided by the job on ground.
Yes. Yes.
Thank you so much. Thank you. I appreciate it.
Wow, we've had a very amazing time with you, Mr. Simeon. Thank you so much for enlightening us for this amazing session. I am very, very grateful. Thank you so much for honoring our invitation. And I'm really, really grateful. I really appreciate you, sir. Thank you so much.
Thank you so much, ma'am. Thank you for having me.
I appreciate you. Thank you so much. Okay, thank you all very much for joining this session. So I want to encourage you to pay your taxes, stay compliant. Tax evasion is a criminal offense in Nigeria. We know that. So let's all adhere to what we have heard this evening. And I think the recorded session would be sent to us probably later for those who still want to listen to this or anything else. So if you want to reach out to Mr. Charity, his details are on the screen, so you can do a screenshot and then reach out to him after now in case you need his services. So I want to appreciate all of you for joining, and we'll just say a short prayer before we call it a day. Heavenly Father, we thank you for this impactful and enlightening session. Thank you for the knowledge and the wisdom that you have made available to us today. And Lord, we pray that everything we have learned will produce positive results in our businesses, in our careers, and in our finances in Jesus' name. We ask, O Lord, that you help us to apply this knowledge with wisdom and with excellence in the name of Jesus. And we pray, Lord, that you guide our decisions and you order our steps. Let your favor rest upon the works of our hands. And may you cause us to experience growth, progress, and increase in all areas of our lives in the mighty name of Jesus. We ask, O Lord, for your continued blessings upon our speaker and for everyone who has attended today. Thank you, Father, for answered prayers. For in Jesus' mighty name we have prayed. Amen. Thank you all so much for joining, and I think we call it a day from here. Have a good evening, everyone. Good night. Thank you, Mr. Simeon.
Thank you, Ma.
Thank you all so much. Good night. Thank you.